recording, please. Welcome, everyone. I apologise for that, the late start we've had to this session, but we will get into it straight away. My name's Troy Henderson. I'm from the Australian Basic Income Lab and one of the organisers of the conference here. And we're looking at one of our themes that we had running right throughout the conference, which is modelling basic income. And we are meant to have 4 presenters in this session. We have one presenter with us, Alejandro.
Social functions of state, regarding the basic.
Could I please ask everyone to, if you're not speaking, to have your microphones on mute? That's so to all the speakers. That's an important point. But we hopefully will be joined by other speakers as we go, but we'll start off with Alejandro's presentation and then move to other speakers progressively as we go. So first up, we have Alejandro on Humanizing Tech, a PhiEconomy's response to health, ecological and social crises, leveraging together exponential technologies and the minimum expected income. Alejandro, over to you.
Thank you so much. Hello, everyone. Can you see my screen? Yeah?
That's fine.
So I'm Alejandro Sewrjugin. I'm based in Buenos Aires, Argentina, so very late for me right now. So happy to be here and to present in the name of the global movement, PhiEconomy, which is basically a new crypto-economic theory of value that is connected with the regenerative and impact idea nowadays that I'm going to present today. That includes the minimum expected income, which is an evolution and a new proposal for a basic income. So to start with, I would like to showcase what are the 4 major design problems in our economy that really inspire us to go and move forward with this idea of the PhiEconomy, right? So basically, centralized monetary issuance by nation. So this is a big problem we see that creates income and wealth disparity among countries and do not offer transparency and accountability to citizens, nor citizens can participate in the process of monetary issuance that I'm going to touch more in detail later on. The second problem is on consumerism. So money issuance as a debt creates the need to produce and sell goods to the infinitum without a why or how, and just for the sake of getting an income for us. So companies pursue revenue instead of value, ending up in global financial system instead of a global value system. The third point is the problem on jobs, right? This is basically a power asymmetry because people who can access capital and can create companies can access to the wealth and the capital, and people who cannot do that ending up on a salaried work, the only way to access an income for most part of the world of population. So notion of work is only centered around market forces. And the fourth problem is on equality, basically touching gender, skin color, and nationality. Historically, only white males, Occidental, access to capital based on the notion of value inherited from the Occident, right? So groups which do not participate in the market economy are excluded, so they are dependent, and an indirect message implies that they are non-productive, a burden, a liability to the society. So the money issuance problem, right, where we see that today money is being issued as a promise of value, as a debt by nation state and in a centralized way. And the focus in general of economic policies are on full employment, price stability, and economic growth, right? So when we see the monetary supply basically centralized by nation, in all countries following the same logic as a debt, right? We see that 10% is what we call paper money or money that circulates, and 90% is the money that banks create, right? Loans, etc., etc. So this shows us that we've been excluding for, I would say, thousands of years, a lot of groups within the society, right? And again, the message is that these groups are a burden, are a liability, and in general, the economy jump on them, and when we have a crisis or we have problems, these are the people that suffer most. So it's not strange when we see in any of the last 25 years, every month, you can check Forbes magazine and you will see mostly white males there, and then mostly the same faces that you are seeing on this screen today. So this is a big problem for us because we all pursue money then, which does not have a previous value, no link towards a human purpose or objectives that we have as a humanity. And we forget about what is important, what are our goals in our human life. So the second problem is the job problem, right? And the job problem, based on that power asymmetry, we see when we look at the wealth pyramid, because there is a pyramid, as all our organizations or type of organizations are really centralized and depends on a decision of a few and a work of a much or a lot of people. So when we see the pyramid of wealth, we see that inequality and poverty and economic concentration are increasing in the last 25 or 30 years, even though that the economic growth that we experience as humanity was never seen before. If you check the International Labour Organization reports also in the latest 25 to 30 years, I would say, you will see always the same. 50% of the population that can get a job are extremely poor or moderately poor, right? So in 2000, to be considered within that threshold was $1 to $3, and then nowadays it's $3 to $7 per day. So that shows, that we have a big problem, even though that people could get a job. Not to account that people and the million of people that are unemployed, right? So the total is more or less in the last 25, 30 years, about 50% of the population that can work. So it's not a surprise that 70% of those workers are unhappy with what they do. Of course, if they cannot get even a decent plate of food at their homes, right? And the second problem within the job problem is that, the market jobs are being replaced by automation, artificial intelligence, and different type of processes, because that makes sense. Companies need to save money and, in general, human resources, because we call ourselves human resources or capital resources instead of calling us people or persons, right? Should be replaced, right? So this is actually a positive signal, because the way we see the jobs or the work should be evolving, right? So last but not least on this problem is that our system of belief, because this big change, it's been challenged and modified, right? So we always said, it's always good to have a job, but unfortunately, having a job for most of the population is unhealthy, right? So we must evolve this idea and upgrade the notion of job and move away from that idea of job creation into a stream of incomes, right? And also moving from economic growth toward human progress, right? So what is PhiEconomy, right? So PhiEconomy is a new crypto-economic regenerative and impact theory of value and money that sits on exponential technologies like blockchain, proof of work, and the Phi algorithm, which is Phi basically is a natural proportion founded in the stars, in our body, and something that nature uses to stabilize and balance systems, right? So in order to solve all these problems, we need to think differently because they really, the economic process really helped to create them, right? So what we should be doing, apply and develop technology towards resolving human challenges. Basically, we need to humanize technology. This means developing technology towards solving these problems that we have, right? So we have plenty of exponential technologies, and I will address with PhiEconomy, and I will center within the blockchain, right? And how blockchain could be the glue that unites different technologies in order to solve the challenges we are facing as humanity, right? So I think for this 21st century and for the economy, there is a big challenge, and this is if we can radically transform our classic notion of economic value in order to set the foundation for a new sustainable, inclusive, and collaborative system under a human perspective. And then again, the key to make that happen is moving away from the notion of economic growth towards human progress that unites people, other species, and the planet together, right? So how we do that? We need to change what is not working, basically money issuance, and realigning what we consider really valuable, right? And the cryptocurrencies, and especially the Bitcoin, really teach us how we can think differently, right? The proof of work we can use as a concept, and basically the proof of work is the way on how Satoshi Nakamoto, the creator of Bitcoin, designed a system, an autonomous system, in order to achieve a goal, right? And this goal was having this big ledger at the global level in order to process transaction without a company behind. So if you think about that, the Bitcoin is the first currency with a previous value, because every Bitcoin is issued after a lot of people called miners do their job, do their work. So the Bitcoin is really an incentive that makes blockchain work without the company, as we understand today, a company behind it, right? We don't need people to bring a curriculum to a manager or to people in human resources in order to connect to the Bitcoin network and do their job. They just connect because they see the rules, they comply with the rules, they agree with the rules, and then they can do their task and be rewarded by that. So this really creates, and this is the great creation we apply to PhiEconomy. Satoshi Nakamoto created a new organizational model, something that is not pyramidal and it's not centralized. This is called Decentralized Autonomous Organization, or DAOs, that as you can see on the screen. And we can create systems governed by this idea, global system for value creation and equal fair wealth distribution, right? So this move away from a centralized system or a well-organization, governments, companies, everything we see are centralized, because this is coming from a stratagem from the old Greece, where we have the stratagem building, where all the generals get together and decide what they are going to do in the battle, and then the soldiers will follow. This is the way we have built all our system, and that's not a surprise that everything is pyramidal because of that. So we need to change that organizational model and move into a more decentralized or even distributed, where each person is really a node of value, right? So, and just to end in, it really question ourselves, right? I mean, this new idea question ourselves and say, is there a real substance that transfer value to money? Or what are the reasons for why we as a society, we need to issue money, right? So it's really challenging our profound notion of the economy, right? So PhiEconomy really shows and provide this new view where we say, you know, we have focused only on the tangibles on our life through the market, because the market seems like it's the only explanation today to the value. And we have left behind the social transaction and the social desires for later, right? So even when we have a pension or when we are millionaires, right? So we cannot really marry what we do every day with our intangibles of self-fulfillment in life, right? So PhiEconomy moved this in a different order, right? It turns around 180 and say, why not issuing money by these intangibles and then putting this money into the market forces by the people, right? So this is really looking at the value as an augmented value, and we can marry together social transactions, the qualitative value, and the market transaction, which is the quantitative value of our life, right? And to make it this clear, right, today the economy creates the money and puts the money into this blue bubble, right? Whereas this blue bubble is only the usage and the sphere of the usage of money. And then PhiEconomy provides a new view where we create this new sphere, green sphere, of the issuance of the money, or the money genesis, or social mining, where we can really put the incentives towards the social, the public goods, and the commonalities to be fulfilled by citizens, and create the money or issue money directly from their hands. Usage, autonomous systems. Usage of money. And then through the blockchain, we can put PhiEconomy into the enterprises and all the market forces, right? So the idea and what we are working on and fulfill is plugging in monetary issuance instead of as a debt, as a result of value, helping to achieve United Nations Sustainable Development Goals, right? Because we need the 7,500 million people really changing their behavior and helping to achieve these goals, where we can do it if we unite all together with this reward system, probably in a couple of years, right? So basically something that is being discussed for a long time in the economy forums around the world is like the coupling, the monetary issuance from the goods and the shops and the goods production, and coupling in it towards United Nations Sustainable Development Goals. And the good news is that this PhiEconomy vision that I started around 2012 and created this theory around 2015 is happening, right? So we see solar coin, which is money issuance as a result of producing clean and renewable energy with a solar panel at your home or at your premises, and you can be rewarded by a solar coin per kilowatt an hour, right? And it really touch and help us to achieve several different sustainable development goals. We have other coin called Cure Coin, which is basically money issuance as a result of contributing to the search for diseases cure, like Alzheimer, different viruses, etc. So you put your computer in order to help the scientific community to find those cures using your computing power, right? And even from PhiEconomy, there was a latest initiative last year that was launched, money issuance for unplastifying the planet, basically trying to avoid producing plastic in our economic process, because only 9% of the total plastic in the world is being recycled. The other 91% end up in the ocean every year, 11 million tons of plastic. So companies that utilize less plastic than the previous year get rewarded with a cryptocurrency called UPF. And then we can follow, of course, with different examples. Even the World Bank and IMF launched the learning coin inside their premises, and then other entrepreneurs launched the learning coin worldwide to reward tutors in an online platform, and also students. So issuing cryptocurrencies for both, because together they can fulfill this value of education, right? We can even have cryptocurrencies now looking for rewarding exercise, because if you are more healthy, you are happy, and you use less the health system that is getting more and more expensive worldwide for a lot of citizens, right? So there is a lot of logic behind this money issuance. We have also coins for recycling. This is very common, and we have mostly 1 or 2 per country. We have one ecoducta in Argentina, in Cordoba, also following these ideas from PhiEconomy.
Sorry to interrupt, Alejandro. Could you just move towards your conclusion in the next couple of minutes?
Yes, so I will leave a couple of more examples here, right? And just going to the conclusion, the last 3 or 4 slides. Basically, the proof of work, what I call from the Bitcoin, is democratizing the currency in circulation, this 10% of the money on every country or in the world. And then the decentralized financing is really also democratizing in the hands of the people, also how we provide loans at the global levels, this 90% of the money. And this is an experiment, and this is this decentralization that the countries or governments cannot do today, right? So last but not least, what we propose as minimum expected income with PhiEconomy, we use the minimum expected income as a complementary source of money issuance when we need to balance the system, right? So basically, the minimum expected income is calculated autonomously within this system. It's basically calculated by the total stream of money issuance by each crypto wallet, plus all the payments that receive each crypto wallet divided by the total participant in the system with crypto wallets. And then the minimum expected income is, you have the base for that. And then you get every crypto wallet to check whether they achieve or not this minimum expected income. And if they don't, the difference will be issued so they can all be on the same level because they all participate in the value creation in this system, right? So in this way, you avoid money issuance with a previous value, looking at achieving sustainable development goals, and the minimum expected income allow us the need or exclude the need to have taxes. So you don't need any more taxes on the market, because basically every government get benefited with a contribution for every cryptocurrency minted or mined by each person in the planet, right? So based on the geolocalization on citizen residency, the government received these global cryptocurrencies as a way of receiving an income to fulfill whatever is needed still for the government to pay, right? So with that, I end up my presentation, right? This is my contact information, and open to any question now or at the end of the panel. Thank you so much for your time.
Thank you very much for that, Alejandro. And if I could just ask you to mute your microphone now that you've finished that very comprehensive presentation. And I'll just quickly I'll just remind our participants watching online that you can post a question for any of the speakers through the Q&A portal. I'd encourage you to do that now in relation to the presentation you've just heard. We do have a couple of audience questions. So the first one is...
Okay, thank you. My name is Nikhil Woodruff, and I'm the UK Research Director at the UBI Centre. And I was speaking ahead of time at the BN conference in 2020.
Sorry about that. The question is, what do you think about the environmental impacts of a proof of work system?
Can you hear me? Can you hear me okay? Hello?
It's fine, go ahead.
Yeah, I think that's tricky because proof of work basically consume 2.5 less power than the actual global financial system today, right? So it consumes less energy. And the second thing, proof of work needs 2 things to work, right? Computer power and energy. So because that depends on the market forces, people, what they tend to do, the miners, they are looking for renewable source of energy because they need to go to a zero marginal cost, right? So what's happening in the practical way with the proof of work is that 75% of total cryptocurrencies minted are coming from either solar energy or renewable forces like hydroelectric, right? And if you compare that with the global financial system rely about 70 to 80% on fossil fuels. So the reality is that the proof of work is leading us to look at different ways on how we can create more renewable energies and clean energies, right? And even in my experience, when I do these talks, I have entrepreneurs that comes to me and say, for instance, one in Argentina created a dynamo where it plugs into the water at home, right? And utilize the force of the water to move that dynamo and provide energy to a miner for Bitcoin, right? And that was thanks to the proof of work. So people are really looking into see how they can produce energy at zero cost, right? So I think it's great. It's a great invention, and it's another incentive that probably Satoshi Nakamoto didn't think about it, that is helping us to advance the way or to advance or get more people thinking on how they can produce renewable energies.
Thanks for that answer, Alejandro. I suppose I have one question, just this general issue with cryptocurrencies, but more particularly with Bitcoin that you talked about at several points throughout the talk. The environmental question you've just addressed, but what about the issue with Bitcoin becoming a speculative asset rather than a transaction money, that supports a more distributed economic system? How do you see getting around that problem where people are essentially hoarding Bitcoin like digital gold?
That's a great question. I'm a hacktivist, right? So I'm a hacker since I was 18 years old, and I apply all these hacking ideas for the social and economic system to make it better, right? And I say that because in the hacking community, we have a say that we need to make obsolete the things that doesn't work, right? So, and this imply also things like inflation, things like speculation, right? So we need to become obsolete speculation, right? Because you cannot fight to those things. You need to become obsolete. So your new set of ideas overcome the old idea, right? So that's the challenge. And I think what happened with any new technology, because of education, because of the wealthy people having access faster to the new knowledge, is that start with the speculation, right? So every new technology that you check over the history, you will see at the beginning is just a speculation, right? After, of course, they go through the laggard portion where people look at the purpose that happened with the Bitcoin around 2009 and 2011 or 12. And then you have people coming for speculation. So we are in that process today. And then you move away from that, right? And then you start looking into the purposes and the real substance behind what you are doing. So I think we are through that process still. So I think speculation is good because brings more people to think about that. And I think we are going to have cryptocurrencies as a mean of exchange in the very near future, because when you understand the idea behind any cryptocurrency that has a previous value, this really supersede any of the fiat currencies or the government currencies that are currently in use, right? So I think we need to start, having more education and people understanding that. And when they can go and really mine by themselves, create the money, then they will choose and they will use the money without this notion of speculation, because speculation comes from all this problem in the economy that we are all afraid that what is going to happen tomorrow with our money, with our savings, what we plan to do maybe in 20 years, right? When we start losing that, we are going to use the money as we use water or different other things on our daily basis. So I think we need still some time for that to happen. Yeah.
Very much for that comprehensive response. Okay, Alejandro, if you could now mute your microphone again, and we now have a pre-recorded presentation by Nikhil Woodruff from the UBI Centre, which is entitled "The Impacts of a Universal Basic Income Funded by a 1% wealth tax. So I will play that now.
Okay, thank you. My name is Nikhil Woodruff, and I'm the UK Research Director at the UBI Centre. And I was speaking ahead of time at the BN conference in 2022, looking at what we found to be the impact of a wealth tax funded UBI in the United Kingdom. And you can see these slides as I go through them at ukwealthtax.ubicentre.org. So just a brief bit of information about us at the UBI Centre. Our mission is to make UBI the most thoroughly researched economic policy. So using standard tools like microsimulation or looking at marginal tax rates, just try and separate the good bits from the bad bits in new UBI proposals that are released. And most of our work is United Kingdom and the United States. So just a brief overview of where this presentation is planning to go. I'll just start off with some definitions of what we're actually talking about when we talk about a wealth tax in theory, and then what it's looked like in practice over the years in the UK. And then I'll just go into a bit of detail about how we set about modelling what a wealth tax funded UBI would do for disposable incomes in the UK, before going into the actual findings, and then closing out with some discussion about which results were intuitive, which maybe not, and what we can take away from it. So a wealth tax, just starting with the definition, is a recurrent tax on individual net assets. So specifically, in this analysis, we're looking at an annual flat tax on household net wealth. And we're talking about households, but of course, because it's flat, it's going to be exactly the same as if it were levied on individuals in terms of the liability amount. The administration might be slightly different, but the amount that you pay is going to be the same because there are no exemptions or thresholds to worry about. Of course, other variants exist. For example, over the pandemic, we saw a lot of proposals for example, a one-off tax on the stock of wealth or taxes on financial transactions. And these usually tended to look like progressive taxes, where you have many different thresholds and rates that rise as your wealth increases. And we didn't go for this kind of thing, mainly because we found that you can actually produce more progressive outcomes always by keeping it flat. The question is whether to raise the UBI and have a flat tax, or to cut the UBI and have lower rates lower down in the earnings, in the wealth spectrum. And so it's pretty easy to demonstrate that the first option is going to be more progressive, because think of a household with zero wealth. They're not going to be affected by however much you tweak the rates for their lower income or lower wealth brackets. But they are going to be affected by much larger UBI amounts. So it's always better for those with low wealth to try and increase the UBIs by raising broad-based rates of wealth taxes. So as for how this looks in practice, in the UK we have a load of different taxes that all tax different measures of wealth at different points in time. So you've got taxes that apply on the point of sale, like stamp duty when you sell your house, inheritance tax and capital gains tax. And you've also got the taxes that apply annually at a fixed rate depending on the band that your house or property might be in. For council tax, this is domestic users, and business rates, this is businesses. And if you add up all of the revenue that we get from these taxes per year, you end up with about £70 billion per year, which is about 0.6% of the total net wealth held by households. So essentially, if you replaced all of these different taxes with just a simple flat wealth tax, it would be about 0.6%. Now, we're not going to do that. We're going to model levying an additional 1% flat tax so that we can use the money to fund the universal basic income and have it be budget neutral. So how we went about doing that is with a pretty standard technique known as microsimulation. So what we essentially do is we take a sample of the population and we use computer simulation of benefits and taxes to project disposable incomes before and after we've changed the rules. And then we can compare results by income decile, we can calculate poverty rates before and after, and use that to see what the actual impact is. Now, there's a few extra steps that we have to go through in order to make this as accurate as possible. The first is countering the inaccuracy that is in these surveys by default. So we know that there's problems with using surveys for measuring disposable incomes and benefits and taxes. Because, for example, if you add up all of the benefits that every household reports to receive, multiplied by their survey weight, then you get about 70% of what the Department for Work and Pensions has said they spend on those same benefits. So either 30% of the DWP's budget for these is just going to thin air, or there's some disconnect between the survey and reality. And so there are a few reasons why this disconnect exists. It might be sampling error, it might be measurement error. Either way, we apply a recalibration that essentially adjusts the importance of each of these households in order to be as close as possible to the administration statistics that we trust a bit more than these surveys. So after we've adjusted for that, we need to do the second thing, because the FRS doesn't actually include wealth. So we need to have some measure of wealth in order to be able to analyse this policy, and from that we go to a different survey called the Wealth and Assets Survey. So the Wealth and Assets Survey is an annual survey of households that includes lots of questions on the values of assets that these households hold. It doesn't have enough detail to be able to simulate tax or benefits though, so we have to stick with the FRS for our core analysis. But what we can do is build a model that learns to predict wealth by source from each of these things in the middle: income, adults, children, bedrooms, and then we can throw away the green circle and focus back on the FRS and use this model to predict the missing answers to wealth questions that we think the household would have responded with if they had been asked about it. And so at the end of this, we have a family resources survey which is better calibrated to fix the sampling and measurement errors, and is also enhanced with this extra wealth subset of variables. So then the only thing left to do is actually fully specify the policy. So the numbers are pretty straightforward to figure out how much UBI we can get from this. 1% of 12 trillion, over 67 million people. That's about £35 per person per week. And so what we can do is we can take this policy and run it through Policy Engine, which is a free online web app that anyone can use. You can evaluate changes to population impacts for different policies, or see how different policies affect individual households. So you can run through the results that we've got here with your own ideas, or see how this policy will affect your household. So what you'll find is that it's a very, very progressive policy. The bottom decile sees an increase in their net income about 14%, and really every decile below the 7th is at least the same or better off. Although what this doesn't mean is that everyone within these green bars is all very happy because they're all better off. There are some mixed outcomes between them. If you take a closer look at these deciles, you can see that actually, although 70% of people overall gain more from this UBI than they pay in wealth tax, you have about 13% of each decile, at least, which is going to lose out over 5% of their income. And that's mainly because of this population of society which is asset rich and cash poor. So those people are scattered throughout the income deciles because income isn't always very well correlated with wealth. And that means that you do have these people who lose out a lot, even in the very low income deciles. Without them, the story is very progressive. If you move up the income deciles, your chance of coming out ahead is pretty quickly vanishing. It goes down to just about 50% from the highs of 81%. And if we move on to looking at the poverty impacts, we see very strong impacts for children and the working age population. Child poverty is cut in half, and working age poverty falls by about 22%. But again, you do see this asset-rich, cash-poor population producing this result, which is senior poverty rising by nearly 50%. And there are a few reasons why this is the case for seniors. Seniors tend to draw most of their income from wealth, unlike the working age population, which gets most of its income from employment income. Pensions are going to be taxed at their value under this wealth tax, and so that's a sort of legitimate reason why this senior poverty rise exists. There might be other reasons why it's overstated though. If you have a homeowner who owns their own house, then there's this concept of imputed rent, which is basically the idea that if you are living in your own house that you own, you are essentially renting from yourself. It's just you haven't written it down, you haven't agreed a contract with yourself. And so if we were measuring that, we would say you have this much rental income that you're then immediately spending on yourself. And so if we were capturing that rental income, we might not put a lot of people in poverty who otherwise are in the current way of measuring things. So a lot of this might be due to not capturing imputed rent. A fair amount of it will still exist because pensioners get money from pensions. So even with that, overall poverty falls by about 20%, which is a pretty big reduction in itself, even including this senior rise. And actually, if we look at how this effect varies with different wealth tax rates, we see that this is about as low as it gets. You could optimize poverty impact by going to 1.3%, where it would fall to 11% overall. But generally at 1%, the poverty rate is sort of flatlining. And actually, if we continue to increase into sort of very, very unrealistic levels of wealth taxes, then you're going to start to see poverty increase even in static terms, because you'll be pushing more of these asset-rich, cash-poor people into this definition of poverty. So just closing out, the overall picture is, of course, very progressive. Poverty falls a lot, especially for children, and you just have this asset-rich, cash-poor subset for which this is not the case. And this kind of distorts this link between policies that are wealth progressive and income progressives. Of course, most of this, because wealth is about 60% land, is a result of imperfect data, but not all of it. And so, of course, you've got other considerations like how dynamic effects are going to complicate this picture. We're not considering behavioural responses here, but they will exist. Of course, this is going to be a bit of a mixed picture because the majority of UK wealth is land, and you don't see a lot of the same negative dynamic effects when you start to tax land, then it might be a bit of a mixed picture, but that's a sort of whole other field of research there. And then, of course, we haven't looked at administration here. It would be pretty complex, although it would be easier if you have a simpler tax to administer. And that's the case for not just this tax, but any tax and really any benefits. But overall, child poverty cut in half is a pretty good outcome. 70% coming out ahead, also pretty strong, even with all of the mixed pictures that we've seen here. So yeah, that's pretty much the extent of this. If anyone has any questions, feel free to email me at myfirstname.ubicenter.org. And apart from that, thank you for your time and have a great rest of the conference.
It was a very interesting presentation highlighting the complexities involved in these types of UBI policy changes using the microsimulation tools, which are becoming increasingly popular as a way of, at least in static terms, assessing those policy changes. Unfortunately, as you know, Nikhil is not here to answer questions, so you're going to have to email him if you are interested. And we only have two presenters here who are for this session, regrettably. So that will conclude our discussion this afternoon, and hopefully you can join us for some of the other sessions in the Congress, and look forward to seeing you next year in Korea. Thanks a lot. Bye.